In my view, and the view of many, Agnico is clearly the best major mining company in the world. By best, I mean, best run, great balance sheet, good geopolitical profile of where their mines are, good pipeline.
It's fascinating. Okay, well, what about the mining stocks? I mean, there's some potential opportunity here. I saw you in Vancouver, but to your point, I mean, gold's at a record highs, yet mining stocks have underperformed. Historically, they lead in gold bull markets. So what are we seeing? What aren't we seeing, and why?
Well, what we're not seeing, we're not seeing the move of generalist investors into gold equities, because the macroeconomic environment has not, until very recently, has not seemed conducive to gold investments. When the broad stock market is continuing to move up, albeit with very bad breaths, but the S&P is continuing to move up. The economy is continuing to do well. The dollar is still reasonably strong, and inflation is down, is low, and apparently under control. I don't think it is, but apparently under control. In that kind of environment, people aren't looking at gold investments, and that makes perfectly logical sense. But I think we're going to see, one by one, we're going to see those supports fall away, if you like. It's already sort of, let's say, turning over. I won't say turning. I won't say that it's going to have a crash anytime soon. But you look at the erstwhile leaders, look at Apple and Microsoft and Nvidia. We've seen big declines in those stocks in the last few weeks. And the S&P is let's say the S&P is no longer the one-way bullet train that we thought it was. You look at inflation, you now look at the last 5 months, whether it's CPI or whether it's PCE or PCE core, whatever you want to look at. The last 5 months, the trend is definitely moving back upwards. So at the minimum, we can say inflation is stubborn and a long way above this arbitrary, artificial 2% target that the Fed has. So one by one, these things are going to fall away. And I think people, and the last sort of hurdle, or the last thing to fall will probably be the dollar. But as these things fall away, people will start to look more at gold, and they'll start to look at gold stocks. And one thing to remember, we mentioned that gold's at record highs, and we mentioned that the gold stocks are or haven't had the leverage that they normally have. But let's not forget, not only is gold price at record highs, but the margins of the gold miners are actually expanding. The gold price is moving up over the last 12 months far, far faster, far more rapidly than the costs of mining. And yet every mining executive you talk to, every mining analyst you talk to, on every quarterly conference call for the last 12 months that I attended of dozens of companies, everyone's asking about costs and inflation and everything else. Why doesn't someone just stand up and say the gold price is moving up faster than our costs are moving up? And so the margins are expanding. In my view, this is a fantastic opportunity for the gold stocks.
Yeah, no kidding. Okay, so then let's get back to it. Is it just a matter of the retail investor? Is it just shiny things, looking at things like Bitcoin? And, you mentioned some of these AI plays and tech plays, because, there's this investor hesitation, but you're talking about these margins. We talked to some of these companies, there's millions of dollars of free cash flow. So, what miners are undervalued at this point?
Well, I think that all of the miners, you said which miners are undervalued?
Yeah, I got to ask for a couple tips.
I think pretty much they're all undervalued. I think we're only at the beginning of the bull market. I think what we've seen so far, if you like, is the overture, if we use an opera analogy, and the curtain's about to go up on the opera and the singer's about to start. And that's because of the type of person that's been buying gold. So once the traditional buyer, once the generalist starts buying gold, the gold stocks are going to move up dramatically. Now, when the generalist starts buying gold, he's not going to look at HX exploration. He's going to look at Newmont and Agnico and maybe even Barrick. He's going to look at Franco-Nevada and Wheaton. These big plays are the ones that are going to get attention first. So I would start looking among the big miners and big royalty companies first. I mentioned Franco and I mean, they're both up to date. Well, everything is up to date. But, Agnico is, I was going to say obviously, I shouldn't say obviously. In my view and the view of many, Agnico is clearly the best major mining company in the world. By best, I mean, best run, great balance sheet, good geopolitical profile of where their mines are, good pipeline, diversified assets, really solid company. You can look at Newmont and you can look at Barrick, and you can always come up with some negatives on those companies as companies, but Agnico is, in my view, the best. So if you don't own Agnico, I would close your eyes and buy it. For the next bull market, regardless of price. I also like the big royalty companies. I mean, Franco and Wheaton should be the foundation, in my view, of any gold portfolio. Franco's had a big bounce today, but remember that they lost 20% of their cash flow, 19% of their cash flow 2 years ago or a year and a half ago when Cobre Panama was shut down. They have a big stream on Cobre Panama. Remember, they've written that off. They wrote it off to zero, not just wrote it down, but wrote it off. That means that when that money comes back, which it will, it's all upside from here. And it'll come back whether First Quantum has it or First Quantum sells it to someone else. And unless the mine is confiscated by Panama, which I don't expect to happen, then Franco's stream will transfer to the new owner. And so just think about that. Basically 20% of your cash flow went away. And if that comes back, that's going to be meaningful for Franco. So certainly I would start there. I mean, I can go down the list of juniors if you want, but certainly I would start there.
Well, I talked to Sean Boyd. I mean, Agnico, they're doing crazy work. And then on top of it, you put onto this play about critical minerals, and their plays up north. And we're seeing the world, and specifically China, starting to hoard critical minerals. I mean, is this opportunity bigger than just gold and silver on the mining side?
I think it is. I mean, to me, gold is the one with the best risk reward potential. Because I can imagine a scenario in the next few years where I don't want to own copper and nickel, frankly, and that is if the Chinese economy goes downhill and the US and China get into some tariff war, and God forbid if they were to invade Taiwan. But I can imagine a scenario where other metals will not do well, base metals will not do well, but gold will continue to do well. So I would say gold has the best risk reward at the moment. But certainly other commodities, whether it's the rare earths, because as we know, it's not that the rare earths themselves come from China. As we know, it's all the refining is done in China. And so we need to move away from that. Copper is just very, very attractive to me. Uranium is attractive. So yeah, I mean, I think companies like Agnico with the rare earths, like Barrick with the copper, and Newmont now has copper. More copper than they did. Yeah, no, definitely. But those just add spice, if you like, or icing to the cake.
Yeah, or a little bit of diversification to your point. Adrian, I got to ask you about China. You just brought it up. I mean, we've seen this aggressive accumulation of gold, buying 44 tons in 2024. At the end of the last year, the bank reported holding 2,280 tons of gold, still accounting for about 5% of its total international reserves. I mean, what does this tell you here? I mean, if you're an investor and you're seeing this, what are you doing now? Is this potentially a move away from the dollar?
Yeah, absolutely. I mean, let's first of all say, if you or I were Chinese in the Politburo, would we be wanting to sit with the majority of our reserves in US dollar at this point in time? I don't think so. We would be wanting to move away from that as rapidly as we could. And that's what's happening. And I think that's just going to continue to happen, frankly. And I don't want to get political here, but when President Trump threatens the BRICS with 100% tariffs.
Yeah, I told our audience that you were coming on the show here, Adrian, and they were asking me on X to get your gold outlook. So I have to ask you about prices. I mean, break down short-term targets, long-term targets. I know we got that psychological level of $3,000 gold, but we're damn near there.
we're almost there. It's funny. Just in Vancouver, you mentioned Vancouver 2 weeks ago. Someone said, "So, give me a target for gold this year. Do you think we'll break through 3,000?" I said, "That's not a very aggressive target right now." Yeah. Oh gosh. To me, the price itself, and I'm not avoiding the question. The price itself is far less important than direction. And the direction to me over 6 months, 12 months, 24 months is definitely up. So who was it? Was someone, I forget who, said, if you want to know what the gold price is going to do, tell me what the dollar is going to do. And gold is moving up in the face of a strong dollar. So when the dollar turns, if the dollar turns, then gold could move just dramatically higher in terms of US prices. I don't know. I wouldn't rise at all to see. We might get some backwards and forwards at the 3,000 level. We often do. But the way gold is moving right now, I think we could easily just break right through it. And remember, if most of your buyers are non-US people, right, they're looking at gold priced in Australian dollars or Chinese yuan or Japanese yen. They're looking at gold in their own currency terms. And so 3,000 is not a magic number for them. So I wouldn't be at all surprised to see 3,500 to 4,000, that kind of range, within the next 12 months.
Yeah, fascinating. Well, we'll watch for it. I got to ask you before we let you go here. I mean, markets are focused on inflation, the Fed. We're talking about some of these issues with tariffs, but what's the biggest geopolitical or financial risk that investors aren't pricing in here? I mean, there seems to be some underpriced risks right now.
Gosh,
I know.
I wish you'd asked me the thought about it. I mean, I think certainly the high debt levels are something that certain people are beginning to really look at because they're unsustainable. Frankly, they are not just in the U.S. but in certainly in most of the major economies around the world. Debt levels are simply unsustainable. And so that means something's going to break, something's going to change. That certainly is a big risk. Yeah.
Debasement. I wonder what it'll take, when you talk about Trump with these 100% tariffs on BRICS countries and stuff. I wonder who's going to, front run this. Who's going to win?
The problem is with tariffs, nobody wins. Nobody wins. The consumer always loses because the truth is we produce things as individuals and as countries that we have special skills at, and we exchange them for things that other people produce that they have special skills at. And that's what makes the global economy grow. So in a trade war, nobody wins.
Yeah, nobody wins. Okay, well, we're going to watch the environment, maybe $3,400, $4,000 gold. Adrian Day is the CEO of Adrian Day Asset Management. Thanks for joining us today, my friend. Appreciate your time.
Well, thank you very much, Jeremy. It was interesting. It was fun.
Yeah, looking forward to the next one. Thanks, Adrian.